Yo, 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 and welcome back to another episode of the Nyc Griff Show. Today is Saturday, April 23rd. It is 8:41 a.m., and we are excited to be here. Griff, how was your week, man? I know you just got a haircut. You said you were going to tell a story. We got to start the podcast to tell a story. How's the haircut? What's the deal?
The haircut was fine. So two things. I go to this place called Hammer and Nails. So I don't know if you know what that is. It was on
Nope.
Shark Tank at one point.
Okay.
So what they do is they charge a monthly subscription. You either get a haircut, and they do like manicures and pedicures. So you can do 2 services a month. It's like $65 or something. It's kind of nice. The haircut's usually really nice, you know what I'm saying? Like they do the whole head massage thing, to shampoo it out, you know what I'm saying? It's kind of luxurious, you know? It's kind of nice. You go there, you're like a member, it's cool. But yesterday I go, and I don't ever pick a stylist or, you know what I'm saying, like a barber or whatever, because they all do a pretty good job. Like, I honestly, my mentality is like, I get the haircut, but like, you got to have the confidence of a new haircut, regardless how the haircut looks, you know what I'm saying? So just go out there and rock it. Like, it really doesn't matter. Don't make them feel bad. But get my haircut yesterday, and at the end, like usually they'll just like dip your ass back, massage your head, give you the little shampoo. But she was like, "Do you want that?" And I was like, "Why?" I felt real awkward at that point in time. I was like, "Well, I don't know. Like, if you don't want to do it, like, I'm not gonna ask for that, even though like I'm pretty sure it's just like a haircut." But
That's funny.
I ended up just saying kind of no, because like the conversation, I'm a talker during my haircuts, you know what I'm saying? The conversation it was all right. It kind of kept dying, you know what I'm saying? And I can keep it going if I need to. And I just was like, yeah. I got to the car though, and Sierra was like, "You have hair all over your head." I was like, "Yeah, she didn't do the whole wash." But you know what I'm
Oh, so
saying?
you did. So you ended up not getting the wash and
Yeah, I
everything.
said no. I was just like, "No, I'm good." Like the haircut was fine. I was like, I don't really want to sit here longer, and like it was already kind of awkward. So I was like, you know what I'm saying? Like usually they don't ask, but she asked, and it made me want to say no. I don't know, maybe I'm just soft, but
Yeah.
it is it's just tough. It's tough out here in the streets.
I always like to get my hair washed after I got a haircut, just because it, as a dude, then you don't have to worry about like all the excess hair, at least all of the excess hair. I mean, there's still like you have to take a shower, to really get all of that off of you. Um, but man, the wash right after it really is a helpful deal.
Yeah,
But the barber that I go to now, they don't do that at all. So I'm like always rolling out of there just hair, coming off of me like a. Cloud behind me.
need
But
the wash, brother. That's
but
what
I've
I'm
been
saying.
going to the same place for about 2 years now at this point. Here at Bon Ray is the barbershop um, here in Tulsa. Great vibes. Same chick cuts my hair. Shout out to Cass. Going in there, headed in there today to get trimmed up today. So. Um, but
Nice.
hey, let's hop into this. Let's hop into this market check, man. We've had. Have you seen some of the stuff that happened with Netflix here, just over this past week, and I guess really over the past couple of months? But what have been your thoughts on some of that stuff?
I think it's interesting. It dropped what, like 35% or something pretty wild.
Yeah,
Um,
yeah,
I think these legacy players, and I think Netflix kind of is. I think Netflix is more of a legacy player than they are new. You know what I'm saying? Like they displaced Blockbuster, but I don't know. Like you tell me, since when has Netflix done anything to catch your eye or keep you a subscriber or put
look at
out
that. Look at
content you
that.
want to see? You know, I just think it was inflated, and I think this is something that can happen to a lot of these centralized, tech platforms. Because why? TikTok is taking people's time. YouTube is taking people's time. Why get on Netflix when they're charging you $20 a month now and they're trying to crack down on password sharing? Why bother? Just go to YouTube, go to TikTok, go learn something. I think people are learning more stuff. I don't know. Those are my kind of thoughts. I don't know what you think, but it's not
Yeah,
that surprising to me that some of these, I think everything's so inflated. Netflix, I mean, like Twitter might get bought by our boy, but it might go private, which I think would be better for it, in my opinion.
yeah.
Um,
I think that would be
Snapchat, I don't
interesting.
know. I'm trying to think of legacy players that have been around for a while in this like tech, like Twitter, Facebook, Snapchat, Netflix.
Yeah.
For what, man? Like we know young people, we know what we want to use.
Well, and I guess to add on to the Netflix deal, I guess they, for the first time in like 4 years, or I don't know, I didn't really read into it too much. I wasn't really too curious about it, but I guess Netflix for the first time in however long reported um, a net loss
Oh
in
yeah,
subscribers, which
it was like
was
20 million, wasn't it? Or
obviously not good for Netflix.
I
So
don't want to say the
there,
wrong
there you
number.
are.
I don't want to say the wrong number. Was it 20 million?
I don't know.
What was
I'm
it?
not sure.
It was something pretty substantial where it was like, oh, like everybody's off of Netflix. Which I kind of feel that way. I was watching The Witcher last night. I don't know if you've seen that.
I have not.
Dude. First episode, I mean, pretty good. So maybe Netflix is winning in my mind, like yesterday. But I haven't watched a Netflix show in a long time.
I see. So the S&P 500 looks like we kind of cruised up a little bit, and then the back half of the week they fell off pretty sharply. So kind of zooming back out here, looking at the year though, you know, kind of similar chart to that 1 week, right? Is up, and then here to the back end of the year. I guess it's looking year to date, right? Or no, this isn't year to date. This is 1 year. What time
What's
frame?
up with the VIX? I think the VIX is always a really good.
Yeah, the VIX is for sure cruising up here. I mean, this typically will trend the exact opposite of the
Right.
S&P. I mean, it's pretty accurately inverse to the S&P. But yeah, so the VIX is cruising up for sure. Which is, if you guys don't know, the fear index. The higher the VIX, it's the Chicago Board Options Exchange Volatility Index is what it's actually titled. And it's kind of supposed to be some rough idea of fear in the market. So the higher the VIX is, the more fear and uncertainty there is in the market. So whenever the market goes down, the VIX tends to go up. So I guess just kind of another way to track what may or may not be happening in the markets. And Bitcoin, we had a nice little cruise up, came back up to 42.8, and then fell off again. I think it's interesting. I've heard a lot of people talking about how Bitcoin is trading so similar to risk on assets, and it just tracks the stock market. And you know what? I don't think that there's any reason that it's not right now. And I think that a lot of people treat Bitcoin as a risk on asset and a speculative investment, and much like people do whenever they're trading in the markets. And so I think it makes sense for it to track it pretty close at this point. Obviously, it's not exact, but I think that makes sense. Do you agree with that, or no, Griff?
Yeah, I just think when it comes to Bitcoin and what has kind of happened since 2020, that last parabolic bump to like 68 when it initially went that way.
Yep.
People were getting stimulus checks, man. Life was very fake. I think it's more so impressive that we've been capitulating between like really 30 and 50, 30 and 40 for a while. I think it's sure. I mean, like, I guess it trades with other things, but as we know, one Bitcoin is one Bitcoin, and the network has been growing very steadily throughout this volatility. And I think they're all just really good buying opportunities. I don't know, what is going to be the first thing that triggers the big next Bitcoin push. It's going to take some huge macro players, but we obviously understand we're talking about bond markets, we're talking about housing markets, we're talking about Rothschild money, which they have trillions. People in this world, in my opinion, unfortunately, entities, central authorities have enough money in today's world where they'll be able to put $2 trillion in Bitcoin like that, and you'll see the price just go boop, right on up. I mean, the supply squeezes are going to be insane when some of these people get in, but where it's trading at right now, I mean, I think it's just good for plebes to understand, like ourselves, one Bitcoin will always be one Bitcoin, and that's really why you should be in it. You shouldn't be in it for, it's going to go to 70,000. Who gives a shit? 70,000 is not, we're still really early. Maybe when it gets to like sat parity, that's when you start looking at other things. But I don't know. Like, look at thankfully, we're pulling this up today. Look at mortgage prices. Look at the average value of a home. I think is over 500,000, but the average sales price being over 412,000, 17% year over year. That's called inflation. I was listening to the Lex Friedman podcast with Michael Saylor, and he always talks about his 1930 house example, where the house was worth like, I don't know, I think it was like $30,000 or something in 1930, which was like super expensive or big property. But now it's worth like millions. Like this property is worth like so much money. The reference, and he was like, "So what is inflation? Is it what the government is telling you in CPI, or is it what's actually happening in the real world?"
Yeah.
And his argument, he was making that argument pretty big. He was like, inflation, people just don't understand. CPI is not inflation. PPI is not inflation. That is somebody trying to just like hide what real inflation is. That is a central authority trying to mask what is a very ugly truth, and that is inflation in some markets is probably what, like 20, 30, 40% year over year right now. The housing market is way outpacing inflation. You know, like there's a lot of things out of balance and out of whack.
Most competitive cities. Let's see here.
I saw something funny. The Simpsons is based on a dude who works at a nuclear power plant and a stay-at-home mom, and they own this big old house. And everybody's like, "What world are we living in where like that's not even close to feasible anymore?"
Yeah. So check that out here. The median sale price $412,000. That's up 17.1% year over year. Number of homes sold 548,000. Says that it's down 7.8% year over year. At this point, national average 30-year fixed mortgage rate is 4.2%, up 1.1%. Also over here on the Fred website, and this is a 1-year chart. So looking back in 2021 here, you can see the rates, fluctuating around that 3%, down to 2.77. There looks like was the low. If we zoom out to a 5-year, yeah. So I mean, you can kind of see as you zoom out, like how quick this thing is escalating here, pretty quick. We're up to 5.11% there, and this is the 30-year fixed rate mortgage average in the United States. So obviously this depends on your credit, depends on all those types of things. But I mean, that stuff is pretty wild.
Can we get a 5-year look from you on that?
Oh, a 5-year look. Yeah, hold on. On the mortgage rate, you're saying?
Yeah, I think there's just a 5-year little button right there, right next to your 1 year.
Yep, there you go. That's your 5-year look.
Is it delayed on me?
Nope, that's 5-year. We're looking back here in 2017 up to 2022.
I don't think it's coming on the screen.
Oh, really?
Yeah, I think that's all that says.
Oh,
what is it 5 years ago? Oh, there we go. Oh, you're good.
There you go.
And they say Bitcoin's volatile, man. And this is at the rate in which you can borrow money. Like that, and that isn't that. I mean, the rate at which you should be able to borrow money in a 30-year fixed mortgage rate. In my opinion, you can even argue that it was never really a good idea. It's something that started really in like Depression times in America before the 40s, but got really popular in 1971 once people started to not have enough money to just buy a home outright or place a huge down payment on a home per se. 30-year rates being as, coming and going like a roller coaster like that, doesn't everybody kind of like, it doesn't seem weird to people at this point? To me, it really does, but I don't know. Like,
yeah. I know another piece that I was talking to a guy here in Tulsa this week, and we were talking about some of the things that are happening in the housing markets. He's a commercial real estate guy, and was kind of picking his brain about a couple of things. We were talking about commercial real estate properties, talking about single family residential properties, and one thing that he was saying that is the absolute truth is that as the cost of money increases, right, as mortgage rates increase, and there's probably some type of there may be some type of common, for every X percentage increase in interest rates that can roughly amount to X amount dollars added to your monthly mortgage. cost, right?
Right.
And so he was talking about as the price of homes are increasing due to what's happening with inflation, and then as interest rates increase and the cost of money to actually buy the inflated home, uh, we're just going to start seeing tons and tons and tons more people get priced out of the market, leaving. Hopefully not. Hopefully this doesn't happen, but leaving the big guys like BlackRock, they're out, buying single family homes as investment properties. And our boy Klaus Schwab with the IMF, or no, with the World Economic Forum, like you'll own nothing and be happy about it or whatever. And it's like, oh boy. So
Do you
hopefully the normal buyer doesn't just get priced out of the market, and then you've just got institutional buyers buying everything as investments. I mean, that seems a little scary, but I mean, I don't
do
know.
you think that it should be? This is a fair question. I feel like at this point,
Mm-hmm.
do you feel like there should be legal? If we're going to have a central authority, if the game is as fixed as it already is, okay? Because just remind the climate that we're in right now. This isn't some free market society, do what you want kind of thing. It's just not, because it's not for me and you, but it is for other people. It's a money thing. Should the government place a cap on how many like commercial properties or more like residential properties you can buy to drive that price up in the housing market? Because like you're saying, these big players just have so much money. As long as they can borrow on a 30-year time frame, 5% is not enough. 7% is not enough. It's going to take a pretty big number for them to go, oh, okay, we don't even want to buy at this price anymore, because everybody needs somewhere to live. Everybody's going to have to rent. It is American real estate has been as sure of a thing as it fucking gets over 100-year time frame. We're talking about holding your value to your grandkids till they're dead, right? And that's really, it is important to some people. It's important to me. You want to be buying something that in 100 years, it still has its value. There is still security within that market.
Now we're getting into the sailor stuff here. So I know you listened to / watched a lot of the Lex Friedman, Michael Saylor podcast, and I've seen some clips from it, and it was really good. But what were some of your key takeaways from that podcast you listened to this week?
Well, I think one of the key takeaways is that the network is important and that Bitcoin can't be copied. But almost before we get to that, I just want to ask you, it's like, should they be able to buy up all those residential properties? Is it in the current economic system we play in, is that fair? Is it equitable? Is it good for our market? It's a very good argument to be very bad. I mean, even BlackRock would have to admit that if everybody's just pissed off in like 10 years and they don't own anything and we all hate them, the American people have been known to get their way one way or another. Like, that's all I'm saying. So do you think it's something that they should put limits on? Do you think it's something that they should be watching more than they watch Bitcoin and everything that miners are doing? How about BlackRock buying up everything? How about Schwab buying up everything? How about, honestly, even just very wealthy people buying up 100 properties?
Yeah.
I understand there's an incentive behind it because government housing is expensive, but money is also so fake. Like, I don't know.
This kind of goes into the conversation that you and I have had several times before. This system is, and whenever I say this system, I'm referring to really the credit economy that we operate in, right? It's all about leverage. It's all about arbitrage and leverage. If I can go out and borrow X amount of dollars for, call it 5%, 10%, whatever your number is, but then I can take those dollars and I can go put them in the investment XYZ, and I can earn 30% of my money or 20% of my money. I'm just making numbers up here to make it easy. Well, then I win that game, right? If I can buy money for 5% and I can make 10%, well, then I'm making a net 5% profit, right? That's what this whole credit economy is built upon. And so I think it is interesting, right? So we talk about, for guys like us, right? You're 25, I'm 24. Moving forward into the future, I mean, are we still going to be operating in the same economy that so many that I guess I would think like our parents, probably the generation just above us, and I would think, well, let's think here. I would say probably people up to, yeah, I don't know if I'd put an age on it, but anybody that's taking advantage of the real estate system in the credit economy type aspect, right? The arbitrage methods, which this is what the vast majority of people are doing, right? I mean, if you're a commercial real estate investment company, you don't save a bunch of cash and invest it, right? You go out and you get investors, and they put money into the deal, and then you take your investors' money and you put probably some of your own money, or it depends on how you want to structure it, right? Do you want to pay yourself via the profits from the business, or do you want to put your money in the real estate deals and make money from the real estate deals you're doing? That's a whole nother conversation. But what they're going to do is they're going to take investors' money, maybe some of their own, and they're going to use that as their down payment, and then they're going to leverage themselves, and they're going to go get a 80% loan to value, right? And then they're going to leverage themselves into buying that property, and then it's going to appreciate, which widens their equity spread. They're going to pay, I say the tenants of the actual investment space, the investment property, whether it's a single family or commercial, whatever properties we're looking at, those tenants will pay down the principal on the loan, which further widens the equity gap, and you get to collect cash flow along the way. That's the system, right? Are we going to get to grow up and play in that same system? I don't know, man. We've talked about this because, dude, things are getting very frothy, right? That's kind of a term I've seen tossed around Twitter a little bit here, is that things are getting frothy in the sense that, man, there's a lot of leverage out there, and we start getting too far over leveraged. That's gonna cause some big issues, right? Ray Dalio is a big proponent of levered. What is it? He calls it deleveragings, credit deleveraging, and he talks about micro cycles and macro cycles as far as the debt cycles go. And man, I mean, I don't know. To go back to your original question, right? You're talking about, should we put a cap on how many properties you can buy? I don't think that that's a good idea.
How many properties you can buy to rent?
Yeah, I think that's a tough idea, because you've got to take it out to the nth degree, right? You think about statistics. I mean, if you limit some entity's ability to purchase property, then you've got to limit everybody's ability to purchase property. I would think, right? I mean, that's like the because I'm not a believer in equity of outcome. I'm a believer in equity of opportunity, right? Not everybody should get the same outcome, right? You
Sure.
get what you've put into it, right? You should reap what you sow. And if you're not planting seeds, if you plant 5 seeds, you don't have the equality of outcome to, the 10 seeds that the guy next door planted, right? You planted 5, that's all you get, right? So I think it's kind of interesting, right? Because you and I could start, Nyc and Griff Show Investment LLC, and we could go out and start buying investment properties, right? But then if we had implemented some rule where large corporations, let's just think about BlackRock, if we were to implement some type of law or regulation that says, hey, you guys, as this size of a company, I mean, I don't even know how you'd write that, but then again, it's like, okay, well, we're huge on property rights in the United States. Thank God. So then is that just for the individual, or is that, do businesses, are businesses included in that? And, for the sake of the conversation that we're having here, is there like some size cutoff of once your business hits this size, and then you can only buy this, you can only hold this many properties? I don't know. Like,
I
I
get
don't
where
think
you're
that
going
would
with it.
work.
It'd be a really complex thing to do. I'm really just arguing it on the podcast.
Mhm.
A lot of it was about inflation.
Yeah. Yeah. Well, I mean, you can go all the way back to the source of this deal, right? Fix the money, and you fix so many other things. I mean, if we operated on a gold standard, and credit was not it wasn't a credit economy or credit society that we operated on, I think that the landscape of where we're sitting right now would be significantly different, right?
And I think that's like, I guess the argument to be made is that out of every 100 people in America, just randomly, right? Everybody talks about the top 1% and the top 0.1% and so on and so forth. I think it's fair to ask um, that question only because I'm a free market. I want it to be a free market. Buy whatever the hell you want, buy as much as you want. I don't want to get that misconstrued. It's more, to me, just seems like I see it on Twitter by honestly a lot of more liberal leaning people. And though they don't understand money, and the question usually gets shot down because of an explanation like you just gave. But I just feel like it's a fair question because these big entities are the reason why demand is so high, are the most of the reason why inflation is a lot higher than, what was it, 8.5%. The housing market's up 17.7% year over year, and it's not transitory. If you can take a look at a lot of housing prices on charts over the 50-year, and it's just far outpaced wages. It's far outpaced, more than wages, it's far outpaced even what middle America can pay for a home. And I do think, like, at a certain point in time, wasn't the government's job to make it equitable for everybody, right? Like, the government's job is to be to protect us, to facilitate certain things, but to really be as discreet as humanly possible. I mean, that's really what it's supposed to be. And so I just see this as much a very fair question because, I don't know, things are so out of whack at this point. There are no tax incentives for broke people. Like, how are broke people supposed to take advantage of the tax system and, go buy up some housing and do the same thing? You can't really, or you have to take a much more risk. And not everybody should have to be, the riskiest investor to just break even or to just keep pace with the housing market. I mean, 17% year over year, you have to be pretty damn good to make your money keep up with that housing market. Or you have to make more money year over year. You have to get a new job every year. You have to get a pay raise every year. You have to sell more every year. And it's just not feasible for everybody. So that's the only reason why I feel like it's a fair question.
Okay, so here's something to keep in mind as well whenever we're thinking about terminology here. So equality, this is from Risetown, what is it? Risetown, whatever.org, whatever this website is. We could look at a couple more, but equality simply means everyone is treated the exact same way, regardless of need or any other individual difference. And equity, on the other hand, means everyone is provided with what they need to succeed. So I think equity versus equality are two big pieces you got to think about when we're thinking about just terminology and how we're trying to grasp what's going on. So again, my thought is I don't want equality of outcome. I want equity in opportunity, right? Because dude, this is just straight up incentive structures. I mean, I don't know if you've ever heard the story. Have I ever told you the story about I think it's, and I don't know if the examples for socialism or communism, or I'm not super well read on how those structures, like what the tiny differences of those things are. But here's a story. There is a group of kids, and they're in school, and they're learning about these different political and economic structures, right? And so they're going through whether I don't remember if it was communism or socialism. I think it was more socialism or maybe Marxism. They're talking about those things, and the kids were like, "Hey, this would be great. Like if everybody had everything, right? If we all had, if we could all pitch in, and we could all no, I say that it's not all pitch in." Either way, they get into it, right? And she's like, "Okay, you guys want to check out and see how this system would work in real life. Let's just go ahead and implement it here in the classroom." And they do it with their grades. So what they did is they would do their schoolwork like normal, right? They do their homework. They take their they go through and learn whatever they're learning at that point, right? And then they would take their exams, and then what they would do is they would average the exams out. Right. Some kids were up on like the 98%, on their exam. Other kids get like 10% on their exam. Well, then they average it all out, and it comes out to like a 75, 80, or whatever it was. And then everybody gets that grade. That's what everybody gets. Right. So the kids at the bottom, were juiced about it because, you know, they got 30, 40, 50%, but then they got raised up to the average of 75, 80, whatever it is. And then, but then the kids at the top, right, they were kind of pissed off because they studied, right? They put in the time and work to study to get a 96 or a 98 or 100 or whatever it was, but then they got brought down to that average. So then in week 2, they go through, they do their homework, they study what they've got to study, and then they take their exam. And this is obviously a super simplified example, but they take their exam, and then week 2, the same thing happens, right? Some kids did really well and they got brought down to the average. Some kids did really bad and they were excited because they got brought up to the average. Well, then come week 3, these kids at the top, they started getting a little pissed off. They were like, if I'm going to put all this work in and I'm not going to get the grade that I've been working for, well, then I don't really want to study all this hard. You know, like I don't want to get a 98 if I'm just going to be brought down every single time. Right. So then what happens? They don't study as much. Maybe instead of getting that 96 or a 98, they get an 80 or an 82. Well, then that lowers the average, right? And that happens over several cycles, and the average lowers far enough to where everyone is failing, right? Because nobody is incentivized to do anything for themselves, right? Which is the huge dichotomy that seems to be from being more liberal versus conservative, right? Is this? It seems to be a shift between it's society's responsibility versus the individual's responsibility, right? And I think that the individual's responsibility is a big piece, because if you fix the individual, then society can operate on itself, right? Which is the free open market capitalistic society. I was reading in the Bitcoin Standard, I think it was last week, and was going back through the parts where he's talking about the government setting pricing. And he said he was talking about basically the differences between a centrally planned economy and a market-driven economy. And in the sense that if you're a centrally planned economy and you're going to set rates, you're going to set prices, you're going to set all those things, right? Where do you get your information to make sure that you're setting prices at the proper level, right? Because it also fluctuates with supply and demand, right? We know that inflation via printing money and diluting the supply, or increasing the supply of money, diluting the value of the existing supply of money, is one way that prices are impacted. But prices are also impacted by supply and demand, right? Maybe there's just something that's difficult to get right now because whatever happened. Maybe there's a natural disaster and something happened, and now getting this certain raw material is difficult, and that brings down the supply for this industry and this thing, and it shoots the price up for those products and services, right? Or maybe the exact opposite. Maybe some cool innovation, or something is done where it's a little easier to make these products and services. Maybe there is there's a bunch of new factories that are built, and they're able to push more supply, driving down the price. Or who knows,
you're
right?
getting into a lot of like the hard economics behind like what the housing market would be. I think the only difference between the classroom housing market socialism example, and I do like that story because that's exactly what happens in socialism, that talent doesn't come out of it. I mean, at the end of the day, I think that's truly why America is America, because we still, on a very small glimmer, you can still get really rich here. You can still really, really, really make it. And that's important because at the end of the day, talent doesn't want to live somewhere where you can't be the next Bill Gates. You can't be the next Elon Musk. Why? Why would I do all of this work if I don't get to live a different life than everybody else? Which I totally understand. And I also totally understand, like, it is about more about like everybody has the same opportunity, but not everybody's going to have not going to take these opportunities and go the same places with them. So it's not really about, I guess it's not really about having the same opportunity. It's more like incentives driven, right? I mean, like, and that's what this will tie right into our Bitcoin topic of the day towards the later part of our podcast. We get to Bitcoin today, but it's all about the incentives of it, right? That also plays a big factor because if you're giving these large companies huge tax write-offs, or they can even report capital losses on some properties so that they pay even less taxes, at what point does it start really affecting the majority of even hardworking people? Because even in capital, like, the whole point of a free market is so that these really wealthy people, like Elon Musk, for example, if we want to think he's as altruistic as he claims to be, we hope that these people who end up making a lot of money off of free market enterprise put back money into the community, because they knows that at the end of the day, that's what will also get them more money. But they can't really do that if they need to go through this government and do all these tax incentives and do it a certain way and basically do it through the government. Then we're not really getting the right incentive structure. And I think that does teeter some of, like, even the housing market, it just teeters it out of place to where we're at today. You need you working, your girl working, your kids working. You want to own a home, you want to stay in there, you want to have like the necessary cash flow to also live a life and own a home. You need to make a lot of money. And not everybody, I mean, like, money just doesn't work that way, as we know. So I think it's more about incentives. And that's what's really important about the one Bitcoin is one Bitcoin. Inflation is Inflation is theft. Inflation is one of the worst things society has accepted. And that's kind of what Saylor was talking about a lot on this podcast. And he's like, that's what in Bitcoin we don't have to ever do, because it's not about, oh, um, I have 200 homes and I rent them out to everybody and I make all this money and yada, yada, yada. Well, even at a certain point, that's going to get taxed by a government or get stripped away somehow or whatever. He's like, it's not about like buying some home that gives you like equity or wealth over the next 50 years. It's all about knowing that you have money, or you're in a system where the economic value of what you hold is going to be good in 2140. That's a lot of what he was talking about. It's like, it's all about, he really was saying it's just all about inflation. It's all about even that 2 to 3% inflation. They would say it's good, but it's not, because a free market, you can't dictate how much it should grow a year or not grow. And I think that's what's wrong a lot with the housing market, is that it's a lot of forced growth, really. I mean, like, at the end of the day. And so some of it, obviously, like you're saying, yeah, there's lazy people. There's people who probably don't deserve to be homeowners in America. But this is also the richest country in the world. So is there so many people that deserve to be struggling like they are right now? Is there so many people is everybody financially illiterate, or are times just that hard? I don't know. I think these are fair questions to ask, because in a Bitcoin standard, as we know, if you're broke, it's going to be because it's your fault. It's because you didn't save. Because in a Bitcoin world without inflation, you're not asked to even invest to keep your economic value over time. If you just want to save your money, you can just save your money.
Well, you also got to think back too to our conversation last week with Charlie, right? Because I agree with you on one of the, or on a couple of those pieces about, in the current system that we operate in, certain people stand to benefit more in the system than others. And more specifically, if you own assets, you will benefit more in this economy, in this society, in an inflationary society, because money is flowing to those hard assets. I was just looking at a deal on Twitter that Dylan LeClaire was posting about several different things in the markets with commodities and hard assets, and just what's going on within the financial markets. Talking about the deleveraging is starting, and money is going to be flowing to hard assets. So you think about the bottom, whatever percent you want to call it, right? The bottom, whatever percent that doesn't own assets. Those people are going to be hammered in this time, because they don't own assets that can appreciate in value as the currency devalues. And because they don't hold those things, what they do make becomes less and less, right? It's just the same thing when they talk about inflationary times kill fixed income, right? You talk about retirement planning. So people love building in. There's a book called Paychecks versus Playchecks or something like that. Basically, it's this idea that in retirement, now again, this is making assumptions that we're looking at the exact same economy that we're operating in today, but it's this idea of let me buy a fixed income. And Michael Saylor talks about this at one point in one of his interviews. How much does it cost for me to buy, $50,000 in income guaranteed every single year? How much does it cost to buy that? Well, you go get some type of structured product. Typically, a lot of people are using annuities now, but you used to be able to do it with treasury bonds and things like that. Obviously, now that's not the truth. You cannot do that anymore. They're negative real yields, right? But you go stick a big lump sum of cash in this product, and then it'll spit off a guaranteed X amount, and you can do that contractually with a company, and say, here's this money, put it in these things, and I want a contractual X amount every single month for into perpetuity, right? Think of now that same type of structure for the person at the very bottom of the barrel that doesn't own assets, that's maybe working an hourly job, making, I don't know, $16, $17, $18 an hour, which is, hey, like, we're doing all right, $16, $17, $18, something like that. They're doing all right, depending on where you live, I guess, right, too. That's obviously a huge factor. But you also got to think, so those people are getting hammered in that time. Now, there's also this cultural thing as well, right? Because you and I grew up in upper middle class, kind of middle class, somewhere around there, would you call it? So that comes with a certain type of mindset that was passed on to us from our families, right? Now, think of the people at the very top. Think of Donald Trump's son. What's his son's name? I can't remember. Anyways, the things that kids like that are growing up at the top of the top in the top 1%, right? The culture and the mindset that they have, the way that they think about things is probably different than the way that we think about them, right? And the exact same is also true on the opposite end. The people at the bottom that have never been around, I'll just create a business, or I'll buy assets, I'll accumulate assets. If those people at the bottom have never been around that type of a mindset, well, then there's also this cultural thing, right? Where it's like, yeah, the money's got to be sound, but like, if you're financially illiterate, if you don't understand business and how to really apply yourself and produce in the marketplace in order to get something back, right? Because that's ultimately what the market should be in my mind, right? The market does not reward you unless you give the market what the market wants, right? This is just simple transactions, right? If just because I go out and I produce apples doesn't mean that everybody's just going to give me their stuff. I have to produce the apples and then give them to someone in trade in order to receive something else, right? I mean, that's just basic transactions, right?
I guess, like, what do you think? Here's a point, because I guess this podcast has turned into
we haven't even talked about the topic that we had planned
yeah,
here at this point.
we're basically throwing it out the window for the day. I guess the question is then, what should you live in America, right? What is the lowest quality of life, or what is the lowest performance per se, making money wise, that you should be able to perform and still have a single income family, and you should own a home, and you could have a couple kids, and you know what, you might be struggling a little bit, but you can still own all those things. It's a different kind of struggle. What type of job, what type of person?
Are you talking about setting like a baseline?
Well, I'm just asking, like, what is your moral, what is your ethical baseline? Because my baseline is, honestly, like, I think in our society, I think if you work 40 hours a week, almost anywhere, and I do say almost anywhere, but almost anywhere, 40 hours a week or so, you should be able to afford all those things, because your money should have a lot of purchasing power behind it. It should.
So one thing to keep in mind here is economic value is is relative. And here's
Sure.
what I mean whenever I say this. So
You're going to
40
get theoretical on me. What would be your baseline?
Okay. I'll get to the answer immediately, and then I'll expand on it.
Yes.
I believe that the market rewards what the market wants, right? In other words, if there is demand and you are able to meet that demand, then you are rewarded for meeting that demand, right? Everyone is entitled to a profit if they are producing and they are making if they are making things happen in the market, right? If you're a market maker and you connect the buyer and the seller, right? Or you are the seller, right? If you're producing and meeting demand in the market, you should be rewarded for your efforts in doing that. That's just called profit, right? That's business. I think that is morally sound because the person that you're working with is benefiting, right? In the sense that they get what they want, right? They're able to buy the product or service that they want, right? And it's I always simplify this down to products and services, right? But that's like the all encompassing kind of terms there. So they benefit because they get to buy the good or service that they want, and you benefit because you're getting to sell it to them and make a profit, right? To pay for your production cost, to pay for your overhead expenses, and ideally there's some profit on top that allows you to live your life the way that you want to live your life, right? So in that sense, I believe that that's how it should be. And
Okay.
I don't think that there should be a baseline. I think that if we're talking about free open markets, right? This would be the same thing as saying, hey, we're going to set a price ceiling here because that's kind of where this heads, right? Is like,
No. That's not really what my question is, though. I understand where I'm not thinking about this from some social. I'm just asking
okay,
you. In 1971,
yeah,
most homes were single income families owning homes. That was the majority of homeowners in 50 years ago. Should that still be a thing? Is that what should be happening today? Is really what I'm asking. And because the
yeah.
baseline then,
Hmm.
baseline then was way lower, really, when you think about it, than it is today. And we didn't set any type of, per se, like housing, what would it be, like cost limits or whatever. Like we didn't do any of that, but people still don't own homes. So I guess that's all I'm trying to say is, what is your baseline in terms of what should somebody's day to day look like? What kind of job should a man or a woman have to support a single income family home? What should they have to do? What type of job should they have to
Hmm.
have in order to do that? Because I think it's just like you're saying, yes, there's a lot that encompasses this question, because they have to go out there and they have to make money. They have to have talent to make money. But that's kind of the issue, isn't it? Not everybody's talented. So not everybody's going to go out there and make money. I mean, to be quite honest, in America,
And I think that's a fair system, right? Because if you spend, you were talking about 40 hours a week, right? Let's just use 40 hours a week as a base. If you spend 40 hours a week and you are doing manual labor, I did manual labor for my grandpa whenever I was in high school. He owns a masonry company in Stoughton, Wisconsin, Brickworks Masonry, does a lot of historical work. It's really cool stuff. And so whenever I was in high school, I'd go there in the summers, and I was like a laborer. I was just a laborer. I was mixing mortar. I was moving brick and block and stone from this place to that place. And, I was cleaning things up, making sure that the masons had fresh, new tampered mortar, making sure that they had all the material that they need, making sure everything was good to go. Right now, that 40 hours a week, I think, has less economic impact than 40 hours a week spent as a CEO making large level decisions for a huge company.
okay,
You,
that's fine, but you're missing my point, because
but this
should
is
you
what I'm
both be
saying,
able
though.
to own one home and support your one? I'm not saying should you both own the same quality of home. Should you both have KitchenAid, everything in your kitchen, and
Mhm.
granite countertops? No, I'm asking, should you just both be able to own a home and have a family, and
And
should your
you
money
can
be
at this
able to
point
buy
you
that?
can do that.
You can't do that. You can't.
Absolutely, you can.
No, you
You,
can't.
You absolutely
No,
can.
you
Yep.
can't. That's not
Now,
a thing.
now, now, if
I
you
feel
if
like
you
you haven't taken a look at what the fuck happened in 1971 in a while, because if you look at the disparity between wages and housing prices and productivity, I mean, it's so far outpaced it, because my whole point here is the housing market is so inflated. The American dream is dead, and the right to own property, life, liberty, and the pursuit of property, which really changed to the pursuit of happiness because the government won't let everybody own a damn home. But the life, liberty, and like the pursuit to own property, because everybody deserves to own property in America. Everybody should have an equal opportunity to have a home. And I think that money is so fake now. This is just what I think. I think money is so fake that it has taken the ability for the average person to own a home. They have to go to great lengths to strive to get a home, when really owning a home should be a much more so situation. It should just be, oh, you own a home, good for you, nice, good for you, but it shouldn't be some major fucking accomplishment. It shouldn't be that fucking hard, especially if we have 30-year loans to do so. And I think a lot of it's because obviously money is so fake, inflation is so high, the housing market is up so many percentage points year over year. I mean, it's there's never really been a correction for the inflation. And so that's really my argument. I'm honestly with you. Not everybody deserves the same. Not even close. I mean, there will be poor people. But I just think that it is far too difficult to just own your home, have a family, live your life, because I recognize at the very end of the day, there is there is never going to be equitable talent in America. There's always going to be way more talented people than other people, and they're going to make way more money. If you gave everybody in the world $100 today, the smart people will find a way to get all the money. That's how they always do it. But the problem is that the dumb people, I guess, for lack of a better term, the dumb people don't want the mansions that the rich people have. And if they do, then we can explain to them that you need to go make more money or be more talented. Most people just want to own a damn home. They just want to live in a home. They just want to have something they call home. And they don't really want to have to, choose a specific state to live in the home. They don't want to have to, you know, stretch their budgets extremely thin just to own a home. And I mean, like, if you look historically, America is a powerful economy. You didn't always have to. But then all of a sudden they said, oh, no more gold standard. We're just going to go on this fiat. And I just am saying that we're so far gone that it's just too damn. I mean, it's too damn hard for most people. I'm not saying it's too damn hard I don't own a home yet. I personally can go make enough money to go own a home, and I don't have to. Don't per se have to move. Do I want to own one? That's a whole different question. But should you have to do what I do to just own a home? I absolutely do not think so. Should you have to be some high level salesperson, or be high up in a company, or work for a private company and be an integral part like you are and make a lot of money that way? I just don't. I just don't think it should be this hard. That's really my point. But to your point, yeah, not everybody's going to own one. I mean, no, not everybody, but it shouldn't be this hard at the same time. Somebody who puts in a 40-hour work week for, let's say, Worthington Steel, and is welding the steel and doing a great job for America, yada, yada, yada. That brother should get to go home, drink a beer at his house, on his porch, whatever. And it shouldn't cost so much. It just shouldn't. And honestly, really, money shouldn't be so shitty that you need 30 years worth of your time to buy this home.
Look at that. 30-year mortgages start in 1971. Or this is saying, thanks to Freddie Mac, there's solid data available for 30-year fixed mortgage rates
They started
beginning in 1971.
they
It's
didn't
also
start before
interesting,
that.
think of this here. Look at this. When did 401ks start? And guess what? It's also right in the 70s. Dude, right in the 70s, man, there was a lot of stuff happening that I think was, man, dude, it really changed the landscape of things. I mean, because think of the manipulation here. And this is just kind of a thought experiment, but you take the country off the gold standard, right? And that inherently then begins the printing press and the real expansion of the credit economy, right? Now we're playing with monopoly money, right? And credit is really starting to expand fast. Okay, now then we're gonna start using, mortgages to instead of buying now, we'll just buy over time, right? And we'll pay some rate on it based on what we think the future is going to be, right? So then because we're not buying right now today, we're we're buying it over 30 years. Well, then we can boost how much we would actually pay, right? Because we don't have to have, we looked at the median home price was that 400,000. The median sale price, I guess it was 412,000. Well, I don't have to have $412,000 today to buy my house anymore, right? Now, if I've got, I don't know what that would be in a monthly mortgage payment, $2,000 or whatever it would be. But if you got to pay, $2,000 a month, okay, now I've got to increase my cash flow. Okay, so then if I just increase my cash flow, instead of just having a bunch of cash on hand, if I could increase my cash flow, well, I could leverage myself into more. And I could, if you're just an individual and you want to just buy a house for your family, right? Okay, if I can get more cash flow, if I can make some more money, then I could buy a nicer home. But I don't have to save up all the time that it takes to save up for X amount of home. But then also on the manipulation side, if we know that people are buying homes over 30 years, right? 30-year fixed mortgages. Of course, there's 15s, there's different products, right? But just thinking about super basic stuff here. Now we can pump the prices of those assets via printing money. And it's also funny too to think that all the people that are closest to the printing press here in the United States, all the politicians, they're all rolling in the dough, right? I mean, they own assets, they own tons and tons of real estate, they own equities, they own these things, and the policies that they are moving and making to print and make more money, to pay for this and pay for that, to expand the credit economy, they benefit from it the most because they own all the assets.
You know what's pretty
It's pretty
crazy is
weird, man.
I don't mean to get political at all with this, but how do you I just wrote this down as we were talking because this is what it made me think, because I think we're on the same page now. We were not on the same page there for a while because it was like, I mean, I understand what you're saying in terms of not everybody's the same talent, but at the same time, that's not everybody's fault. Not everybody's
Well,
gonna.
no, hold on. That's not true, though. That's not true. But
No, but
continue.
you're saying that
Continue.
not everybody's gonna. Not life isn't basically life is not fair. Like you're not just. We can't make everybody have the same thing. It's not like socialism doesn't work. Period. Whatsoever. Any form of it does
Yeah.
not work. That I was really just trying to ask. I think it was hard for me to get around to the point where I'm asking, why is it just so damn hard to own a home? And monetary debasement really has led to that and now leading into this. How do you silently destroy America economically? We pose economic warfare on Russia. How do you destroy the world's superpower basically from within? You make money fake and you just destroy the middle class's quality of life.
Hmm.
And how do you really do that? Don't let them own homes. That's what I was just thinking of just in here. I don't know if that's political or not, but I mean, at the very end of the day, what is middle class anymore? How much money do you have to make? And you consider a middle class life the ability to own a home, probably have one or two kids, have a steak dinner with the kids every Friday, whatever, take them to the movies, have a little extra money for mini golf, whatever. I don't know. Take a vacation once a year, whatever your middle class life should be in America. How do
So
you
looks like this survey here is dictating $52,000 to $156,000, is what they're calling the median income in that middle class area here.
how
So
much money?
let me see here. I'm pulling up a couple of different charts here. Trying to find what makes the most sense here for. It said the one that I saw just a second ago was 52,000 up to 156,000, which is a pretty big range there. But that's why there's like the middle class, but then there's lower middle class, mid middle class, and then upper middle class,
Well,
right?
also it varies on what region you're in, and
Yeah,
all those other
there's
things.
tons of
But
variables for sure.
I'm sure there's a place in America. I'm sure there's some hellhole you can live in Mississippi somewhere, or like the middle of nowhere in Nebraska, and you can buy a home and pay $1,000 a month mortgage for it. I'm sure there is, but that's not really a fair. Like, you know what I'm saying? Like, are we telling the middle class they have to migrate to where affordable housing is? So are we having to create affordable housing for our middle class? I mean, I just think it's so funny because the elites in our country, in my opinion, it does seem rather malicious at this point towards the middle class of people. They're undoing their own fantasy life they have right now. You don't want to piss off the middle class. You don't want to make their life hard. That's why I don't think it's American elitists who are doing it. I don't think they're smart. I think it's more malevolence. Like, they don't really understand why it's happening, inflation, whatever. It's a lot to understand, and
I think
they're
there's
just
a huge
happy.
globalist push.
Yeah, but I just don't think most rich people understand. Like, they don't think they're doing anything wrong. They don't think, what they're doing is shitty. They don't. It's hard to understand somebody else's life and be in somebody else's shoes unless you're in them. And it's not like like you said, they're just talented. They're making fucking money. Inflation's not affecting them the same. It's not their fault at that respect as well. We're talking about, and we know whose fault it is. It's the damn money printers that have destroyed America's middle class, because
Yeah.
the wages just have not been able to keep up. How can you run a small business if people are asking for $30 an hour? Because
Well,
really,
I don't know that it's necessarily that wages haven't kept up.
they haven't kept
Necessarily.
up. Not
It's
with
that
productivity.
it's the purchasing power of those wages, right?
It's
Like,
it's all of it, right? I mean, like,
I
isn't it
mean,
all of
yeah,
it?
because
Wages
absolutely,
haven't
because
kept up with productivity, but they also haven't kept up
yeah,
with assets. And there is no, until now, there has been no truly scarce asset that you can buy and your value gets, defeats inflation over time. Until now, there's only 21 million of them. It's Bitcoin. Any middle class person, and if you're listening to this, it's not financial advice, but buy the shit out of Bitcoin, okay? Because nobody will ever be able to debase your Bitcoin, and stuff like this won't happen anymore to you, because at the end of the day, you can't debase a hard money standard. The world might change, but you cannot get debased. Yeah, it's just I mean, there's just so many glaring factors where I'm for one. Go be a one percenter, man. Everybody should strive to live that life, or to go make that money, or what have you. And you should strive to do it in my opinion, in an honest way. Like, you should strive to do it in a way where you're really giving something to the world, where you're really producing something for people. But anybody should strive to make a lot of money. It's just that since we got off a gold standard, since there's nothing that we have to base our money to, and we live in a credit world, it disproportionately is helping some and really hurting others. And I mean, you don't need the whole point of free market capitalism is it gives everybody the best quality of life. That's why in America, this is not free market capitalism, because people are getting shuttered right now.
look at
And
this
they're
here. So this is New York and Boston here in this example. Median home prices in New York and Boston are in blue and yellow here. And then the median household income for those same places in red and black. And so you can see that median household income has increased,
yeah.
but at a much faster pace. You got the home values up.
There's just only so much you can
Different,
do, because
right?
if you're a middle of the road dude, you know what I'm saying? Some of you is subject to what your business will pay for your labor. And
Mhm.
you can have some good negotiating skills and even get a good raise. Well, what's a good raise in 8.5% inflation? like like 14%, because we're not even talking about keeping up with housing prices. What should and I don't not everybody feels this way, and I don't really know the answer to this question. Was minimum wage developed for, like, should you have been able to own a home on minimum wage back in the day? Like, could you own a home on minimum wage back in the day? Was it designed for that? Or I'm not too sure. But I will say this: if it was, there's no way in hell you're buying a home with minimum wage. You're not even coming close. And that should be the biggest telltale sign to everybody. Like, everybody always gets up in arms. We always fight with each other because there's a lot
Looks
of
like minimum wages were first put in place by the Fair Labor Standards Act of
uh,
1938.
well, everybody can argue all the doodah day long about, should minimum wage buy a home anymore, this, that, or the other thing. I think it's just another divisive technique by our government. Like, you're poorer than
Fair
me. You
enough.
shouldn't own a home. Well, you only do this much more than me. We should all be telling them to go, well, to kind of go shove it where the sun doesn't shine, because it's like, no, money should just be buying more for everybody. As technology gets better, life should be getting more deflationary. The only reason why America is inflationary is because central authority, probably insurance companies, and at this point, there's people, the 1% does far outweigh a good portion of our country. Even the top 10% far outweighs a part of our country, to where they're buying so much stuff. It's inflating these housing prices so greatly. Now it is helping some middle income Americans, but you want to know what the question is for the rich versus the middle income right now? The rich are like, wow, my housing price is going up. Let me refinance this bad boy and buy 3 more. A middle class human being is going, holy fuck, my home's never going to be worth this much again. I should sell it, pay off all my debt, and try to shut her down and buy a house again with my new money or my new life. So
Yeah.
middle class is going, man, maybe I can get a new life. The rich people are going, let's buy 5 more. And I'm not saying either are
And the
wrong.
people that don't own anything are at the bottom, just getting
We're just
absolutely
fucked. Yeah,
destroyed.
we're just praying that these interest rates go back to 0% again, and we'll all just barrel into the housing market as best we can again, because it's really more about interest rate than it is about price.
See,
And
so hold on. So I gotta tell you a little bit about again, to refer back to the Bitcoin standard. So and I think, did I read something? Did I read this? I can't remember if I posted this. I did. It was the State of Lending episode that I had posted. I read this. I don't know if you'd ended up listening to that one, but basically, in a sound money standard, um, the available capital for lending should be the should be people's foregone consumption. And what he explains that means is that if Griff, if you and I make X amount of dollars and we've got this money that we need to use to pay for living, right? To pay for food and water and living the lifestyle that we live, but then we have some extra and we forego consumption of it today so that we can save it for tomorrow or whatever it is, right? We're going to save it for something into the future. We can just save it. We're talking about a sound money standard. Let's just talk about the Bitcoin standard, right? We want to save our Bitcoin. We don't want to do anything with it. We just want to hold it. We just want it to store our value. And I think that this is something that'll probably evolve over time. And I haven't heard a whole lot of people talking about it exactly on how it'll work. But of course, I think this is kind of the staking deal. And I don't know, staking's a little weird, but the idea would be then, or I could save it, or I could put it in a lending pool and say, hey, I'm willing to lend out some of my money to give it to somebody else that needs to use it for their business. And that is a risk to me. So I want to be compensated for that. And
sure,
so I'm going to put my Bitcoin in this lending pool, right? And that's what creates the amount of lendable capital, and the market, the individual sets the price of the money, right? Because if nobody has any lendable capital, but people need a ton of money to start their business. They've got this great business idea and they're going to do this and that and this and that, but I don't have the money to do it. I need help with my money. So he's going to go out as an investor. He's going to pitch it to people, he's going to go out and pitch to investors, and hopefully somebody has some lendable capital that they'll give him at X rate that they are happy with, and he's happy to get the money to go and employ it in his business plan, right? The market individuals should set the price for money, right? So you talk about like a 0% rates for money, that's not quite good, because if everybody can get money for free, let's just call it for free to make
Which
it
they
easy,
kind of have been recently.
which very well they have been. I mean, at one point
Yeah.
interest rates were negative. You were getting paid to take shit. You know, it was
Yeah,
like,
it's fucking crazy. I
yikes.
don't know why we didn't, because we just weren't. We didn't have enough. We didn't have enough liquid. I mean, we just don't have enough money yet.
Yeah, and so it's wild because again, this just goes back to the central government trying to set things, right? So here's the question. Here's the question. So if the central government is going to centrally plan our economy, then where are they going to go? Who are they going to talk to get all of the market information, to do all of the market analysis that they've got to do to understand? Okay, well, we're gonna set the price of homes in this area at this price. Well, at this point they do things on a national scale. Um, how are things different here in Tulsa, Oklahoma versus Sacramento, California? Is everything the same? No. Well, why is it not the same? Oh, well, there's differences in where you can get raw materials, right? So maybe like in construction, right? Certain finishes are more expensive in certain areas because they're not native to that area. So you got to ship them in, right? They're more specialty products. A great example of this is something like manufactured stone that gets placed on homes versus brick, right? And in some places, brick can be super effing expensive, and it doesn't make sense to do it because there's not a lot of brick made in that area. There's not a lot of clay in that geographical area. So they've got to ship the brick in from somewhere else. And brick's pretty heavy, so it costs some money to ship it, right? Whereas here in Oklahoma, there's tons of clay all over the place. Brick is super cheap and economical here, right? So, but the main piece is that the individual market actors, they set the price levels by voting, right? And they vote with their dollar. They vote with whatever that currency is by where they put their money, right? Because it's at that point then it's supply and demand. If I'm putting all of my dollars toward product or service A, well, and everybody else does that as well, then there's a lot of demand there, right? And if there's maybe not as much supply, well, then the value, the price of that thing is going to go up. Now, could the central government do that? Yeah, but they would have to come. They would have to come talk with me and all the other market actors that are demanding this thing. That's never going to work. That's never going to work. Or so either the central government has to go out and they have to do surveys all day, every single day for everyone in the country, or we could let the market run itself. We could let the market find equilibrium, right? We can let every individual vote with their spending, right? Wherever you spend your money, wherever you consume from, wherever you produce, that's what creates the market, right? I think that's the main deal there.
Well, maybe next week we'll talk about Bitcoin.
Maybe next week we'll talk about Bitcoin. But hey, this was a great episode, man. This was some good topics that we haven't quite gotten into yet. We have talked about a ton of Bitcoin here recently, and so it was nice to talk about some other things that are going on in the markets because we've had these conversations for a while too. Where we've talked about kind of the real estate things and what we're wanting to do in that. And so,
I will say, to close it off for myself today, I would have never even cared about any of this in economics because I was an economics major in college, and as Nick knows, we just skated through, smart enough to just get it done. You know what I'm saying? But how much did I really learn? I can look back in hindsight now and say I learned some things, but Bitcoin, once you start diving into sound money and like learning about what a Bitcoin standard might be or what a Bitcoin economy might be, it does lead you into other things and gives you different opinions on a housing market, because a closed-minded view of the housing market is, well, if you don't make enough money, it is what it is. Tough luck, move on. And that's what a lot of people in America are bred to do. I mean, that's the American way of life. Just put your head down and work, 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 work. And there's nothing wrong with that. But what Bitcoin makes you do is it freaking pulls your head up from the mud and goes, oh, what's the government doing? Oh, how is the game being played? And you just kind of get to look at life from a different perspective. Once you realize, I mean, really, and all that's different between me and most average, the average person who doesn't really believe in Bitcoin yet, I've read enough about Bitcoin, listened enough, talked to enough people to understand that if we adopt this form of money, the quality of life for the average person will get a hell of a lot better. And almost one Bitcoin will always be one Bitcoin, because I don't know, every person I've talked to that has really dove deep into this, even the ones who own a lot of it, they want to see the average person's life get better. They don't like the system we're in right now. They understand it's not very equitable. And through Bitcoin, I've learned just a little bit about the housing market. I think it'd be cool to get somebody on who knows more than we do, even just like to ask these questions, because a lot of what we were doing today is just getting ready for somebody to come on to ask a bunch of questions, because we know some. We can follow the charts. We follow a lot of this stuff, but to think you're an expert in everything, it takes hours to be experts in certain things. And I like Bitcoin more than I like to study housing markets, but to each is everybody's own. But those are my closing thoughts on the day, Nick. I just want to say studying Bitcoin leads you to a lot of stuff, and it just gives you a whole new perspective on everything, really, to be perfectly honest with you.
Absolutely. Those were good closing thoughts there. That was kind of a fun one. We haven't gotten to have one of those conversations about kind of more non-Bitcoin related things in a little while. So that was good, man. I'm excited we got to have that one. Thank you guys for listening to another episode of the Nyc and Griff Show. Hit us on Twitter down there at Nyc and Griff Show on Twitter. Come talk with us. We're looking for more guests. We want to share more ideas, more perspectives with everybody else to try to form more of a well-rounded perspective and idea of what we believe the world is for ourselves. So, and hopefully we're helping people do that along the way as well. So hit us on Twitter at Nyc and Griff Show. If you're not watching on YouTube, you can check us out on YouTube. It is Nyc and Griff Show there as well. You could also see that. I think you can find that on our Twitter. We need to figure that out. So, yeah, excited to have another episode. We're looking forward to the next one next week. Peace.